Today, we're going to talk about, again, Meta's stock surge. Last week, it was actually about 15%. This past week, it was down a few percent. But as I said, there's definitely risks out there that people can ignore. And it seems like people, again, are fixating on that two-letter key word, I guess I'll call it, AI. And that's what really has pushed Meta higher as of late. And it essentially has wiped out all of its year-to-date losses and is pretty much flat on the year now.
Yeah, I mean, it's been pretty volatile this year. In June, it got as low as 542, and then it shot up to 681 in the span of couple weeks or so. Last couple days it's been down, so now it's technically negative on the year. But yeah, I mean, it shot up on some of this recent news coming out.
Yeah, and what we're looking at is, again, they're spending a lot of money on AI infrastructure. They're also going to release their own custom chips. They're kind of following that playbook from Amazon and Google or Alphabet as well. They've, again, invested heavily in top engineering talent. And they also released a new model here as of late, which I guess people are fixating on. But this past week, we also got news that Anthropic is in very preliminary talks to lease computing power from Meta. And that could total maybe about $10 billion is the size of that deal. And I got to say, I mean, this is one thing that's interesting with all of this capacity that's being built out in the AI space. You know, is it a positive? Yeah, it's good that Meta, I guess, is going to maybe make some money off that excess capacity. But they're not the only ones now leasing out that excess capacity. You have XAI doing it as well. Are we going to see an overbuild potentially with all this construction of these data centers? Again, positive, but also a negative that you have to consider as well.
I mean, it's difficult to really understand how much power, computing power, these companies are using. And I mean, these data centers are massive. Hugely massive. And so they're creating all this power. And I mean, it takes a long time to build these things. They're building them all over the place. And, you know, we always hear about processing power getting exponentially quicker all the time. So what does that really mean in terms of how much computing power that they're going to need this year, next year, 5 years, 10 years down the road? But, you know, everyone right now is just, you know, spend as much money as you possibly can because you have to be competing against everybody else in that space.
Yeah, and it's, again, at some point those profits are going to matter and the cash flow is going to matter, but right now it's spend, and it seems like we'll figure it out later.
Yeah, no, yeah, absolutely. Well, everybody else is spending, so we can't lose to them. Yeah. So we're all in this.
What are we spending on? I don't know. I mean, we'll see. You know?
Let's see. Yeah, billions of dollars, trillions of dollars, got to do it.
And I'll tell you, as an investor, I mean, we're not really heavily in this space. I mean, we have some, you know, I mean, I think everybody's going to have some exposure to AI one way or the other.
Yeah.
But I mean, definitely these hyperscalers, it scares me with how much money they're spending and what that potential payoff is going to be. It's tough to predict out. And, you know, it's a big risk that I think people shouldn't ignore.
At the end of the day, businesses are in business to make money. And so that means on any investment, you know, spending money in computing power or AI data centers or, you know, whatever it might be, the whole purpose of that is to earn profit on the utility that is generated from that. And I mean, they're spending so much money on it. So at what point is there, you know, a return on investment on that? What does that really look like as far as a return percentage? And I mean, Ray Dalio was talking recently about, you know, a lot of people are just associating the companies with the technology when really they're two separate things. The technology, I think, is going to be there. I don't think that's, you know, up for debate. AI is here and it's, you know, transforming very quickly and, you know, it's a useful technology and we are just starting to understand, you know, all the practical uses for it. But that's the technology piece of it. And then you have these companies, well, just because, you know, they're investing in technology doesn't mean that each one of them is necessarily going to be successful. And we've seen that all throughout history. So, you know, right now they're spending money because everybody else is spending money and you don't want to be left behind if you are in that space. But, you know, at some point there needs to be a profit motive behind this. You know, when is this going to actually create cash flow? I mean, where is that going to be?
I mean, absolutely. And the way that we look at Meta too is that this is still an advertising business, and this is how they're funding their AI ambitions. Meta is a great business in terms of the revenue they're able to generate. But one thing that concerns me is the lawsuits now that are coming out. I mean, the European Commission announced preliminary findings that Facebook and Instagram may violate the Digital Services Act because of what regulators call addictive design features, including infinite scrolling, autoplay videos, and recommended algorithms that encourage users to stay engaged for longer periods, right? As an advertiser, those are the things you like to see. But the problem is, again, if it's addictive and society doesn't view it as beneficial, we're going to have a target on your back. And if the findings become final and Meta does not make sufficient changes, the company could face fines of up to 6% of its global annual revenue.
That's huge.
That's huge.
That's a huge number. That's not a slap on the wrist.
No, it's not. Oh, it's $5 million. I mean, we're in the billions here. I mean, that fine would be about $12 billion actually. And the other issue that I see is they might have to make changes to how its platforms operate across Europe. And I was curious, I mean, how big is Europe in terms of Meta's overall business? I mean, it's not small. It's about 23% of the company's total sales. And if you all of a sudden have to change that algorithm, I hate to say it, but you make it less addictive. Well, now as an advertiser, you don't want to be on there to that same degree because you're not getting as strong of an ROI. So if they make a huge change to that platform, I think that's almost more costly long-term than that $12 billion fine.
Yeah, I know. When you think about it that way, Meta and these social media platforms didn't create them to be addictive for no reason. They created them to be, I think maybe intentionally addictive, but the purpose was to get more eyes on them longer. And so that makes them more attractive for advertising. So, if $12 billion represents 6% of their revenue, that means their annual revenue is about $200 billion or so. A lot of that is because, constant scrolling. I mean, it is easy just to kind of look at things and, oh, wow, I've just been scrolling and not really knowing where the time goes.
Yeah, and we've already seen this here in the U.S. with some different lawsuits as well. And I was blown away by this number. This actually came from Meta as an estimate. But here in the U.S., the legal liability could total as much as $1.4 trillion.
That's a big number.
The likelihood,
unless you're Elon Musk.
Yeah, the likelihood it gets to $1.4 trillion is quite frankly very low. But I think it shows you the scope of these lawsuits. And the issue is, they're alleging deceptive business practices and potential penalties range from $2,000 to $20,000 per violation. But, as people start winning, and we've seen some cases already here in California, New Mexico, where they've won against these social media companies. That's just one person. Yeah, I mean, $2,000 one time is not a big deal, but you extrapolate that across all the users. And, I mean, you think about it as a individual, it's like, well, they got, let's say, $10,000. And you know what? I think I'm addicted to social. I think it creates this cascade effect potentially. And we're going to have more cases coming to trial here in August with California, Colorado, New Jersey, and Kentucky, all leading the way. And if those set precedents that are bad for Meta, I think you see more and more lawsuits come to fruition, or at the very least, arbitration and settlements, which is frankly just not good. I mean, number one, you're spending your time finding legal battles. Number two, it's going to cost you money.
It's going to cost you money. And like we just said previously, if that causes them to have to change the way that their algorithms work and makes it less addictive or whatever, that could hurt future revenue going forward. It's actually funny. I apparently was a part of a class action lawsuit against Facebook recently, and I just got like $30. I don't remember what that was for, but that was the other day. I got a Venmo for like $30 that apparently I signed up in 2023 something. I don't even have a Facebook anymore.
Sweet.
Yeah, so I was like, $30, that's cool.
$30 for nothing. So yeah, I mean, you extrapolate that across millions of people.
So there's a lot of people that are like, oh, I could get money. Yeah, sure. They screwed me.
Yeah. And I mean, I mentioned New Mexico. They actually recently won a $375 million judgment against Meta. And again, this issue of more and more, again, $370 million, quite frankly, to Meta is not a big deal. Mm-hmm. But you compile that and you compound that against different states and with individuals. That's where that true legal liability lies. And then, I mean, speaking of legal liability, there's another thing that came out this week where current and former Meta employees have sued the social media giant, alleging that the company used AI in its latest round of layoffs in a way that was discriminatory.
Talk about ironic. Yeah. This company is investing in AI. They used AI to lay people off, and that was discriminatory, and now they're being sued for it.
Yeah, no, I think it's a problem. And I mean, here in the state of California, good luck. I think they are going to lose hands down, or at the very least, settle.
They'll settle.
Yeah, I mean, so it's something that I just want to point out with Meta stock. Again, as you talk about, oh, it's AI, just buy, it's doing great. And Meta, again, I mean, they're growing sales, growing earnings. Their advertising business is a huge, huge profit engine. but that slows down. I mean, that's a big problem. And right now, it's not an expensive stock, trading about 18 times future earnings. But the concern is, as we said, if they change that business model, if they start losing these lawsuits, that 18 times multiple is potentially overstated because those profits are going to be lower. So Meta is one that I'll tell you, I don't think I would go near. There's just so much risk that I think people need to be aware of.